It's our fourth week with home buyers for the month of June. And just want to say thank you for everyone for coming to our fourth week of the home buyer for the month of June. I'm going to bring Renee in right quick. Okay, well, it's not letting me bring her in. Oh, Lord. It's not letting me bring you in. What's going on? I'm touching the thing. Oh, shoot. Renee, did you request to come in? Because it's not allowing me. There you go. They're going to request. Yeah, there's Renee coming in. This week we got some special guests for you. There she is. Hi, Renee.
Hey! I swear these technical difficulties gonna be
Yeah,
they gonna make us stronger.
yes. So, we want to welcome everyone for week 4. I was saying week 3 earlier to the home buying month of June is the home buyers month for the month of June. So we've been talking about that for the whole month, and we have
Mhm.
some special guests that will be joining us shortly to
Yes.
talk about a few things. Again, Asia Stoddard, Renee Johnson. We've been in doing real estate together investing for over 20 plus years.
Hmm.
And we just want to say welcome to everyone. Come on in, come on in.
Yes. Welcome. I see our special guests are in the building. Thank y'all for coming.
Yes, yeah.
Hello, Inner Beauty. Hello, Auntie Christine.
Hey, Christine. Hey, Pay Quintine. I'm going to pull you in just a second. We're trying to get some more people on to come on in, come on in, come on in. Come on in the room.
Hey, Wanda. How are you?
Yeah, just sending it out to people just to say, come on in the room. Again, I'm Asia Stoddard, Renee Johnson. Just to tell you a little bit about, well, Renee, go ahead, tell about yourself first. A few minutes. Oh,
Okay. Yeah, I'm playing with stuff. So, my name is Renee Johnson. I am a realtor and associate broker with Virtual Properties Realty. Um, like Asia mentioned earlier, been doing real estate for over 20 years now. I'm a wife, a mom of two, also a grandmother. Um, let's see, what else can I say? I have a lot of experience in real estate designations. I'm a sales representative specialist, accredited buyers representative, real estate negotiation expert, um, licensed here in Atlanta. Let's see. Well, I should say Atlanta, well, Georgia, anywhere in Georgia, with a focus on the Atlanta metro area. Uh,
hey,
hey.
Arnita. Thanks for joining. Thanks for joining. So, a little bit about myself. A lot of y'all already know. I've been in real estate for 20 plus years. I'm an associate broker. I am a certified probate specialist. I'm an investor too. Also, I'm a mother, a wife, a grandmother, um, all the above. So, but with further, we have about 10, 15 people on here now, I think. I got my glasses on and I'm still squinching, Lord. But
Well, we can go ahead and go because you know
yeah,
how
I'm trained.
Instagram will not let us be
Yeah,
great and go over a certain length of time. So
yeah. So,
just let's go ahead and get it popping. They'll pop in or they'll watch the replay because we will have the replay available after we finish today. So
okay. The Paquin team trying to pull you in. Did you request to come on? Because it's not allowing me to. I don't see anything popping up for you to request. So hit request to come on. It will have technical difficulty with Renee too, trying to get her on. And it's raining like crazy where I am. So
hello, MP Atkins.
that's Maria.
Ah, Maria, how are you?
Um, the
And
pay
Miss Ardina,
right.
welcome.
They got some great information to tell you. I can't pull you in unless you request it. Ryan and Ryan. Ooh, I'm sorry. I'm hitting buttons up here. Ryan, let me try. Okay, we may have to move on. Let me try calling you to see. Yeah, we still have house phones. Oh, there you go. So he should be able to come on. They should be able to come on now. And I accepted you.
There we go.
There.
Hey, there they are.
Hey, hey, Ryan. Sorry
Thanks,
about the
guys.
technical difficulties. Been having had that issue with Renee pulling her in. So, just a little bit about Ryan and Ryan. The Ryan, both of y'all got blue jackets on. I can't even just say. So the Ryan, where you had Ryan P. Ryan Paquin. That's Ryan Paquin has been my lender for. I've known him for working with him for 15 years, I think now, Ryan.
Yeah, 16. Yeah.
Okay, years, and he's a phenomenal loan officer. He's been #1 in all the Maryland programs in PG, the DMV area. Renee's from Atlanta, so she'll tell you about the Atlanta folks. But um, he's been doing business since 2006. Being a loan officer, he's an office manager of Home First Mortgage. He's a great guy, phenomenal team. And Ryan Vitalis, I've been doing work with him since he joined First Home Mortgage in 2010. So he's phenomenal too. He's the office, the assistant branch manager too. Ryan's the manager. So I'm just trying to hurry up so to get to the good stuff. But they're a phenomenal team. The Paquin team is awesome. I love them. I work with them whenever I have buyers. I work with them. So mostly I do listings, but if you need a loan officer in the DMV area, Ryan, the Paquin team is it. So it's on you guys now. Welcome, welcome.
Thank you
Thanks,
so much.
David.
Appreciate it. So yeah, I guess the first thing we want to talk about. First of all, I'm Ryan Paquin, branch manager of First Home Mortgage here in Crofton, Maryland. I've been with First Home since 2006, and I've been a loan officer since 2002. So just celebrated 20 years in the industry. And Ryan and I have been partners for about 12 and a half years now. And we run a team. There's about 10 of us on the team, and about 35 people in the office that we work with. So we've in-house underwriting, closing, all the programs, construction perm loans, renovation loans, bridge loans. Like Asia said, we've been the #1 lender in the state for the Maryland mortgage program for many, many, many years. But I think the conversation that a lot of people are having now is, they're scared about interest rates. They're scared about inflation. There's a lot of fear dominating conversations right now. And I just want to talk a little bit about what this all means. So I have a background in finance. Before I got in the mortgage business, I was a trader on the American Stock Exchange. Capital markets is kind of my passion. So let me explain a little bit about what the Federal Reserve, who kind of dominates the conversation right now, they're the ones dictating monetary policy. Okay, so they're responsible for creating stable employment and stable monetary policy and controlling inflation as much as they can. And so when COVID hit, the federal government had to spend trillions of dollars to combat, just an economic collapse. And so they threw a lot of money at buying all kinds of instruments like bonds, to help keep interest rates low. So what's happening now is we have to pay for it. It's like we spent a lot of money on our credit card, and now the bill comes due, right? And so we're going to talk a little bit about how the interest rates have climbed just because now, what does that mean? I mean, people are scared about interest rates going up. Well, we're just normalizing. What happened over the last 2 years is not normal, and now it's normalizing. Okay, so it's a phenomenal time to buy because property values are continuing to climb. We're not going to see the collapse that we saw in 2008 because we don't have the toxic assets that we had back then. This is more of a stable market. Okay, so we've kind of gotten out of the fear of inflation, the fear of interest rates climbing. Things are stabilizing a little bit. inventories improving, so there's a better opportunity to get your offers accepted as buyers, right? And so now, what are the steps to take to become a homeowner? Okay. Well, the very first step in the process is getting pre-approved. Okay. Well, what does that mean? To get pre-approved, you have to fill out a pre-approval application, which allows us to pull credit, analyze income and employment. Okay. Make sure you have the assets necessary, and analyze your ability to repay. So what is your debt to income ratio? Okay. So take your monthly income. We typically lend up to about 50% of that. Okay. So if you make $5,000 a month, we'll lend you a total of $2,500 a month in debt. And that includes mortgage payments, all the items on your credit report, credit cards, things like that. Okay. Hold on.
Recharge that.
Yeah. Good. We're going to get a charger in on our phone. Sorry. Okay. There we go. So once you, pre-approval is typically good for 120 days from the day that you pull the credit. Okay. So you have to be in a home for within 120. Okay. The pre-approval is set based on certain interest rates. So if interest rates are moving all around, you want to make sure that you're updating your pre-approval frequently so that it's not off, right? If rates go from 5% to 6%, you might not qualify for as much as you did previously. Okay. Now, let's just say, for example, you're pre-approved based on your debt to income ratio qualifies you for a $400,000 house. You like the mortgage payment, but it's going to cost you $20,000 to buy this house, and you don't have $20,000. So what are the viable sources for down payment and closing costs? Okay. Well, typically it's down payment assistance programs. There's federal programs that help with that. So it doesn't matter where you're buying in the United States, you can get down payment assistance. But then there's also state and local programs as well. So we deal with multiple county programs, as well as the Maryland Mortgage Program, the DC Opens Doors Program, the HPAP program, as well as Virginia Housing and other states. Okay. And typically that ranges anywhere from 3% of the purchase price up to 5% of the purchase price. And it's only required to put 3% down in most cases, 3 to 3.5% down. So there's plenty of money out there. You can also ask the seller to help cover some closing costs, which was very uncommon in the last 2 years, just because of how the market has been. But now it's getting more and more common. There's more inventory on the market. Homes are staying on the market longer. So the buyers have a little bit more leverage to ask for that. Okay. Outside of that, you can get gifts. You can from family members. You can borrow from your retirement. We have a lot of people around here in the government, so they have thrift savings plans, which is like a government issued 401k. Okay, and you can borrow money for that for down payment.
Ryan, I have a question. Oh, I'm sorry to interrupt. I do have a question for you. So when we're dealing with the, I think one of the biggest questions that I keep getting as a realtor is people that are afraid, and I know you touched on it a little bit when you first started, people that are afraid of the interest rates increasing and where the interest rates are right now. So I try to comfort them by saying, yes, the interest rates are getting higher, but they're not high. Can you tell us, can you explain a little bit more about that one, but then also kind of, for the people that are watching, reassure them that interest rates are not high right now.
Yeah.
They're increasing, but they're not high, and explain what that means.
So what we saw, you can talk about this a little bit, right?
Yeah. I mean, historically speaking, these are still relatively very low rates. But what we saw is the Fed came out, and you keep hearing about them increasing interest rates. And a lot of people think that, oh, that means mortgage rates are going up. That's actually not true at all. So mortgage rates have really built in what we expect the Fed to already do. So when they come out and they say we've raised the prime rate 0.5%, the mortgage business, the mortgage rates have already built that into pricing. So that's not what's really moving the rates. What's moving rates is when they come out and say, okay, not only are we going to move rates today, but now we're going to raise them 3 more times this year. And if we weren't expecting that to happen, then that's kind of what shifts our interest rates higher. But that's already been built in. And so there was a great article out yesterday that I read about. This is likely the peak that we're going to see because the Fed has come out and been so aggressive with what they're going to do this year that's likely it now. And that's already been built into interest rates. And in fact, in the last 48 hours, we've seen rates improve quite a bit.
Yeah.
So we're coming off some of these highs now.
Hmm.
And many are calling that 6.5 that we saw probably being the peak for the rest of the year.
Yeah. So,
I
you know, a
agree.
week ago, interest rates were 6.25, 6.5, and now we're at 5.99. So
Okay.
they
Well,
have
that's
come
good
down off
news.
the highs. Yeah, it's good news. And look, to what Ryan was talking about, when the Fed raises the Fed funds rate, that is just the short-term borrowing rate. That is not mortgage rates. So when they raise that, it does not impact interest rates. It's the expectation of what they're going to do that changes our mortgage interest rates. Okay. But the expectation now is we are going to raise rates 3, 4, 5 times throughout the year, but the rates already have that built in, right?
Mhm.
Now rates are coming down because there's this idea that maybe we're going to go into a recession, whether that's this long, deep recession or just a quick recession. It's still going to be an economic slowdown, which is why the Federal Reserve wants to raise rates. They're trying to curb inflation. So if you lower the demand for things, then you're going to have a slowdown and it's going to lower the prices, and that helps with inflation. That's why they're doing this. We're trying to get things back to normal because
Mhm.
2.5% interest rates on a 30-year fixed is not normal. So what
Right.
we saw over the last 2 years was an anomaly. It was just crazy times, right? And so we need things to get back to where we were in 17, 18, 19, which was 5%, 5.5%, right, on a 30-year fixed mortgage. So we got to pay for the bill that's due. Rates are going to go up. It's normal, but it's still a tremendous time to buy because every month you make a mortgage payment, you're building equity in your property. So either way, whether you buy or rent, you're paying somebody's mortgage. You might as well have it be yours.
Mhm.
And the other thing I'll add is you can always refinance. So
Right.
if you miss the
Mhm.
market and let's say rates are at 4% this time next year, that's what refinancing is for anyways.
Right.
So it's not like
Yeah.
you missed out on it forever.
Perfect. I know last week, I believe it was we had our credit counselor on last week, and I believe, if I'm not mistaken, someone asked the question about like how does your um what am I trying to say? How does your credit score affect your interest rate, and does that play a major part when it comes to interest rates as well?
Sure. Yeah. So depending on what type of loan program you're using, it can really have a massive difference in the interest rate. So if you're in the upper 700s with credit score, you're going to get the best rate out there on a conventional loan. If you're at a 580 credit score, you're going to get the worst rate out there on an FHA loan, right? And it will dictate what program you use, which will also dictate your payment and terms, right? So, you know, if you can get into if you can get into a conventional loan over FHA, for example, you're way better off. You're going to have a lower APR, a lower borrowing cost over the life of the loan.
Mhm. Okay. Well, I'm definitely excited to hear that you all believe that we've reached our peak. Because again, that for especially the first time home buyers that are really not sure of what's going on, but also some of the clients who are selling a house and buying another one. Of course, this is a huge topic when it comes to conversations about buying. People are literally afraid. They're scared. They don't know, and
Yeah.
should I stay in the house that I'm in, or should I go ahead and sell this one and cash out and drop that onto a new house? But I'm afraid of, having to pay these huge interest rates, and my mortgage going up. And then, also we have to educate our buyers as realtors to say, okay, yeah, it's going to go up. It may go up a little bit, but I think we've peaked at this point. So that information is key when it comes to even us being able to relate to our clientele to say, this is what we could expect. And is there any way you can tell us, like, if we're at, let's say, 5% now and 6% a month from now, and I know you say that we've already peaked, but does it make that big of a difference in your mortgage price? And is it best to go ahead and jump out there and get it? And like you say, in refi,
Yeah.
does it make that big of a difference?
Yeah, no. So, I mean, it makes a difference in your payment, certainly. But for most people, it's not going to be a game changer in terms of like make or break the decision to purchase.
Mm-hmm.
You're going to have a greater interest rate off if your interest rate's higher, so you'll be able to deduct more on your taxes. Okay, and if rates dip, you're going to refinance anyway, right?
Mm-hmm.
But either way, whether it's 4% or 6% or 7%, you're still building equity every single month, which you're not doing if you don't own a home. Yeah, it's the greatest wealth builder, wealth accelerator is owning real estate by far. It's not even close.
Absolutely. So,
Okay. Thank you so much for that information, Ryan. Are there any questions, you guys, for Ryan P and Ryan V? Or did you have anything else you wanted to share right quick, Ryan?
I would just add that, most of our clientele, I'd probably say, are first-time home buyers. So we went through that period of where rates were at 3%, sometimes in the twos. And in our market in Maryland here, it was like 10 to 20 offers on every property. It was crazy, and it was pretty much national. And so the silver lining, I would say, with rates going up is we're having a lot more buyers have success, get their contracts accepted now. We had some even come in with closing help, which we hadn't seen in almost a couple years. So I'd say if you're a first-time home buyer that's kind of thinking or on the fence about it, I can assure you that even though the interest rates are much higher, you're not as likely to experience that 20 multiple offer situation where you didn't have a shot anyways. I mean, some of our clients, using first-time home buyer programs, competing with cash offers, it wasn't going to work. So there is a big silver lining here, and it's curbed buyer demand a bit, and that works in your favor right now as a first-time buyer.
Yeah, it was rough. It was rough out there.
Yeah.
I always say it's rough out here in these real estate streets, but over the past couple of years, it was like, oh my God, like you said, the multiple offers were ridiculous. And unfortunately, a lot of the conventional and the cash
Beat them out.
we're beating out the poor, little first-time home buyers who really, just trying to get started and get a piece of the American dream. They were just kept getting beat out. It was discouraging. A lot of them were quitting, and I'm like, no, let's just keep looking. What's meant to be yours is going to be yours. But it was rough. It was definitely rough. And so I'm, like you said, the silver lining. I'm looking forward to the leveling out or the balancing out of the market, because I feel everybody who desires to have that part of the American dream should have it, and it should not be saturated with the investors or the big companies just coming in, swooping in, hedge funds just buying up everything. So I am excited to hear that we are coming, and I'm starting to see it. I had started to see it a few weeks now, but it's just always good to hear a reassuring from those who are seeing these interest rates and stuff every day and what they're doing, that we're coming to more of a balance. So
Ryan, it's at the Paquin team, so I'm gonna pin it right quick just in case anybody wanted to reach out to you guys, or you phone number. What do you want to do?
At the Paquin team.
At the Paquin team?
Yeah.
So this is their IG or Facebook at the Paquin team, their information. So just in case anybody wanted to reach out to them, I'm gonna post it right quick and pin it for a little bit. I should have pinned that earlier, but this is their information. If you have any questions, thank you, Terry. Terry said that's great information. Maria, very helpful information. Delicious Diane Delicious said it was, thanks for that information. So great feedback from people. You have any last, not requests, comments? Because I don't see any.
Yeah, I can't see any
Questions. Nope. So last. Nope. Anything else? Final words, Ryan and Ryan?
No, just jump in.
There's some great
don't be
loan
nervous.
officers. Again, don't be done. But buying a house, don't be nervous. Just do it.
Just go do it. You got to jump in. You got to create that roadmap to homeownership, and that's the first step in the process. Is just jump in. Let us help you create that roadmap so you know exactly what it's going to take to get you into a property.
Absolutely.
They're very great with a lot of first-time homebuyers program in the DMV area. So if you're interested in moving forward, definitely reach out to them. I highly suggest them in the DMV area to be one of your loan officers. They're a great team.
Thank you. Thanks for having us.
Yeah.
Thank you for coming. It's great meeting you guys.
Appreciate it.
Nice meeting you.
Bye.
Okay. Hey, Renee, it's us again. We're about to bring and the loan officers now.
So one thing I want to say while you're bringing them in, and I don't know if they have to, can you request to bring them in, or do they have to request to join? Kenny and Wanda.
I'm looking for her name.
She's me. Is it Mima or something?
Okay.
But while you're bringing them in, I do want to say one thing that Ryan, and I see my Ryan is on here. Hey, Ryan.
Hey, nephew.
One thing I do want to say, and
Hey,
I'm glad you said
I
that.
her in. Mimi, I can't bring her in. I don't see anything saying she needs to request it.
Yeah, if you don't see her, because I
Mm-mm.
don't think I can do it. Um,
I see her name, and when I put on, it doesn't say allow me to bring her in, so she gonna have to request it.
okay. Do you
Oh, and as a moderator, no, that's not it. No, it's not.
do
Can you request to come on live with us?
do you remember how to request? Go down if you go down at the bottom. Um, let's see. I can't do it because I'm already on. But what I was going to say is, hey Vex, what's up, Zago? What I was going to say is that don't despise small beginnings. You got to start somewhere, and like Diane Delicious Delights just said, uh, do it.
There,
What she say?
there's Wanda. I got her.
All right, you gotta tell Kenny to come on too. Do it afraid, just do it is key. Um,
Hey,
hey,
Wanda.
cutie pie.
Hey,
Where is Kenny? He kid.
Um,
You
There he is. There he is. I
oh,
got
he's
him.
coming too.
Yeah.
Yeah, so just do it, but do it afraid, but do it. What's up,
There,
Kenny?
Hey, how are y'all?
We're
good. How are
doing good. So let's check for technical difficulties. Make sure we can hear everybody. So this our first time having like four,
you?
like the
But
Hollywood Squares.
when Kenny came on, I'm hearing static.
Yeah, I
Can you
hear a
hear
little
me?
back. I can hear you, but there's some background, like some uh
this is
white.
AC.
Oh, his air conditioning.
Oh, that's what it is. I'm
Okay.
sorry, Kenny. You're gonna have to sweat for a few minutes, okay?
I can do it. I'm used to it.
Okay.
So let me introduce you all to two of my favorite lenders here in the Atlanta metro area. I love these guys dearly. They have always taken care of my first time home buyers on more than one occasion. Kenny and Wanda have been making home ownership a reality for more than 22 years now. Together, they are Team Wilson and enjoy helping their clients explore the many innovations and options to get their mortgage that's just right for them. Providing special care and attention to each of their clients is their number one priority, and I can attest to that. With their experience, along with integrity, honesty, and exceptional service, great communication, Wanda is bilingual. She is my Latina sister, and I look. It's so funny because I call her and I leave her these what because I'm learning Spanish, so I leave her these voicemails, and then I'm like, okay, if just in case you don't know what I just said, I'm gonna say it in English, but I'm like, bear with me because I am learning. But Wanda is bilingual, which is very key to helping her clients to achieve their American dream and home ownership. So without further ado, you guys come on in and just tell everybody what you're going to be talking about today. And the floor is yours.
Awesome. Just want to say hello to everyone. Kenny Wilson here. My wife Wanda, we are our team. I did want to touch on a couple of little things that the other team was talking about that and answer your question or add a little bit to what they said to your question there, Renee, as far as people who are scared. You're either going to own a home or you're going to rent, right?
Mm-hmm.
And if you're renting, we all know that inflation is setting in. Well, inflation basically is the value of the dollar has gone down. Well, the cost of doing everything is going up. When you're renting from a landlord, how are they going to cover that cost?
Mm.
They're going to increase your rent. In fact, rents have increased about 34%.
Yes.
Compare that to a 30-year fixed mortgage. You're in a fixed rate mortgage. So your payment is fixed and it's not going to increase for that 30 years as far as your principal and interest. There is a portion of your payment that could increase, but that's a good increase because as you gain appreciation, your property taxes could go up, but that's because your house is worth more money now. So, you know, quick thing for those who are looking at purchasing but are scared.
There's uncertainty in renting is controlled by a landlord, and you're taking on an expense instead of an investment. Whereas if you're buying a house, it's a 30-year fixed mortgage. Your payment doesn't change. On the low end, you're gaining 7% equity each year, and you have a lot of certainty. So it's definitely a good thing to go ahead and move and purchase. Rates are not high; they are higher than they were. But like the previous team said, we were in an abnormal situation. And I'll add one other thing to that you could use. Over the last 2 years or 3 years, people have been refinancing out of their mortgages that had higher interest rates. You're going to do the same thing. The interest rate's a little bit higher. If it comes down, you're going to refinance, like they said. So a good thing to kind of illustrate that is marry the house, date the interest rate. Find that house that you're in love with, marry that house. Your interest rate, if it goes down, you're going to refinance it. You're going to get rid of that higher interest rate, marry the house, date the interest rate.
That's good.
Those are a couple little quick things. Pretty much a lot like the other team. We Wanda and I both have been working together for many years, both in the mortgage business. I got in '98. I think she got in late '97, early '98, and we've been with Southeast Mortgage since 2019. We were with the company for 9 years and then got recruited over to Southeast Mortgage. One of the best decisions we've made. It's an awesome company, and they take a different approach than a lot of other companies do. So we're happy about where we're at and the level of service that we're able to provide and the programs we're able to provide. We also have, a ton of different down payment assistance programs to help people get into homes here in the Atlanta market. You have your basic type of loans that you're going to look for when you're getting pre-approved or conventional loan. The standard conventional loan requires 5% down, and you're going to need a minimum of 620 credit score. But really, the higher your credit score, the better a conventional loan is. Once you get below probably a 680, that kind of shifts, and you got to look at an FHA loan because they're not as heavy on what we call that risk-based pricing. The question was asked earlier. Go ahead.
Kenny, you're up a little bit. Did y'all notice that, how you keep going in and out, one and out?
It's in a bad place.
Okay.
It's a give or take, it just depends. His Wi-Fi kind of messes up. We're currently building our home and we're currently living in a camper. So that's the situation.
Are y'all nearby each other that he can come over to your room? Because yours seem okay.
Yeah, no, I'm in
No.
Calhoun.
Oh,
Okay.
She's about 2.5 hours away.
okay.
Oh, okay. All right.
Okay.
Well,
Yeah.
for the most part, I know. Well, I know I can hear you. For the most part, you were cutting out a little bit, but if anybody is hearing feedback, let us know in the chat because that's the only way we're gonna pretty much all hear each other. But it'll be help if you all let us know if you can't hear Kenny. But go ahead and keep talking, Kenny, and we'll see what the people in the chat say.
Okay. So as I was saying, once you get below that 680 credit score, FHA is probably going to end up putting you in a better position as far as your monthly payments and everything because the rates will be drastically different. FHA loan is not an inferior loan to a conventional loan. A lot of people have that thought. It's not. It's still a 30-year fixed mortgage. It's government backed. And the biggest thing that people fear is that the appraisal process is different, and it's not. For the appraiser himself, the only thing he's going to do is check to make sure that the house has no safety concerns, which we want that anyway. But as far as how the appraiser comes up with value, it's all the same. It's supposed to be true value. They're going to look at the comparables in the area, which are houses that are similar, and come up with a value. We also do USDA loans. USDA is a rural development type loan. It's for the outskirts. It's not going to be in your cities, but it's 100% loan, and it's a great option if that's something that you qualify for or the home qualifies for. It's not a specific zip code or city or anything. You have to actually go in and to their eligibility maps and put in the actual address to make sure, but those are for your rural areas. We handle VA loans. And that's another great thing too. If you've got for any of the real estate agents that are on, think about everybody who has those lower interest rates that we saw over the last several years, that they now have a lot of equity, because I know in some areas here in the Atlanta market, we gained 40% equity in the last 2 years. Now that person can take a hold of that equity, and if they had an FHA or a VA loan, their loans are assumable. What that means is that a buyer, if they qualify for that loan program and can come to the table with the difference between what the sales price is and what their loan amount is, they can take over that low rate that they have if they've got a 2.5% rate, or if they've got a 3%, which is much lower than what the going rate is. That's a great selling point for somebody who is listing if they have that type of loan. And real estate agents, that's a great thing to think about and ask your sellers or someone who's potentially selling. So that's pretty much the gist of the different types of loans that we have. Wanda's going to step into some what we call some non-traditional, non-QM, non-qualifying loans that give us some different options. So I'll let her speak for a little bit.
Thank you so much. So I just wanted to touch in. I'm super excited about, the other loans that we are able to service. There's the I-10, ITIN mortgage loan that's otherwise known as the tax ID. That's huge for the communities that we aren't able to, or the cultures that we aren't able to service because of not being or having proper documentation. Such as a social security card, or not having a permanent residency, or even a work permit. Like, they have nothing. So this is a great program for them. I'm not going to talk too much about that program. I'm going to give you bullet points only because, for the sake of time. But it is an LTV of 75%. So it's a 25% down payment, and it goes as low as credit scores of 600. The minimum loan is 125, and it can cap at 120. So if they've had a foreclosure in the past, it's a 1-year seasoning, and it's 2-year seasoning if they've had a bankruptcy. So it's only for a primary home only. So this isn't for investment properties. The DTI is up to 50%, which I think is incredibly generous. And non-warrantable condos are allowed. And for one unit, buy, a multi-unit property. And it's good for purchases, cash out, or refinance. And that's the gist on that tax ID program, the I-10. So a lot of Hispanics that I work with, a lot of Hispanic community, they fall into that category. Encourage all of you not to, and Renee and Asia, if y'all come across somebody that, they're not speaking your language, don't let that person go. You seek out me or another Spanish loan officer just to be able to help you with that translation.
Mm-hmm. Question for you. Explain to them what now warranty means.
It means that, so like a condo, like FHA, if FHA requires it to be a warrantable condo, it has to be FHA approved. So this does not. It's a non-warrant. It doesn't have to be. It doesn't have.
So in other words, FHA has particular guidelines that each condominium association has to meet their guidelines. And if it doesn't meet their guidelines, then FHA will not give you a loan for it. So there's now warranty. That's good, because there are some condos that they rent it. They have more investors than they have homeowners in the development. Their guidelines, it's a certain percentage. I can't remember the amount with FHA requires for homeowners to live there, but they can be great condos, and you can't purchase it simply because they have more people renting the places out as investors than people living in it, and that's one of the requirements with a FHA loan. So that's good to hear that you guys do that, so that going forward, that if you find a nice condo that doesn't meet the FHA guidelines, you do have an option to go ahead and utilize that loan process.
Yes, that's another option or a venue. And the other non-qualifying mortgage loans that we service is the bank statement loans, which is excellent too for those that are self-employed. And just, when we're self-employed, we're not trying to pay, more on our taxes when they come due. So, we have deductions that we show on our taxes. And so when you show a lower net income on the as your bottom number, the bank statement loan really comes in handy because they will take into account your, they'll create an income based on your bank statements. So they have 12 or 24 months business or personal bank statements that they can derive an income from. The great thing also about that loan is that it goes up to a 90% LTV. So it's just 10% down, and there is no MI, which is great. And scores also start at 600 with that program.
Nice. Nice. All right. Does anybody have any questions in the chat? Because again, to considering time, like we mentioned earlier, as much as we would love to talk to the two of you and Ryan all day long, because I'm sure there's a lot of things that you all would probably want to share. But if anybody that's on right now, if you have any specific questions, please drop it in the chat. I think, Kenny, you put your contact information in the chat as well, just so people can get in touch with you. And then we'll also link, when we do the reposts, we'll also link how to get in touch with you, the two of you, as well as the two Ryans at the Paquin team, just so that anybody has any questions. Are people free to call you with just questions?
Oh, absolutely.
And just, I know I pass on people to y'all all the time that may not necessarily be ready right now, but I just feel it's important that if you are in the mindset of, I want to buy a home, but I might not be ready, that you speak to a loan officer to be able to put you on the right path. Because if you don't know to do the right things, or what to do in the meantime, then you could be running around in circles and doing a bunch of nothing. So that's one thing I like to do.
Mm-hmm.
Say that again.
Yeah.
A bunch of the wrong things.
Yeah.
Yes, that's one of the things that we, as a company and as individuals, we take serious is everybody can buy a house. It's just a matter of whether we can get you approved today or it's going to be sometime in the future. We have what's called a credit analyzer. If your credit's not where it needs to be, we can analyze that credit and tell you what you need to do to potentially raise your credit score, give you a game plan, talk about the time frame that it's going to take with that to gain that. Sometimes it's something very simple. And we might be doing the wrong things to try to improve our credit, like paying a collection. Well, paying a collection may not increase your credit score. It may actually decrease your credit score. So being able to go in and manipulate the credit report to tell me what I need to do to potentially get your score up is big, because we don't want to do the wrong thing. We want to make sure we have a game plan that's going to put you where you need to be in the quickest amount of time.
Absolutely. Well, I can't see all of the, well, I know in times past, I'm looking, but I don't see any questions. So if there are no additional questions, again, we want to thank you guys for coming on and chatting with our followers. Thank you, Ryan and Ryan, again. I don't know if you guys are still on here, but we appreciate you all coming as well. And if you guys want to sign out, again, I thank you both for taking the time out of your busy schedule to be here with Asia and I and share the information that you have. And like I said, y'all can get in touch with them. Wanda is at me. Is that me and Mama? It's at MEEAMAMA. And Kenny is, tell yours real quick again, Kenny, before you guys go.
Mine
Your,
is Kenny Keeps Lending MTG.
All right.
So Kenny Keeps Lending Mortgages. So we appreciate everything. We appreciate y'all having us on. If anybody has any questions, give us a call. It's very important whether you're selling a house and looking at purchasing, or you're a first-time home buyer. Get with a mortgage professional who can help you come up with a game plan, not just throw you into the mortgage that they think is best. If you're scared about rising interest rates, and you've got a low interest rate on the house you are in now, but you want to buy a new one, we can come up with a game plan and look at your total house interest rates. Maybe instead of taking all your equity, throwing it into the new house, it's better to pay off some a car loan or credit card debt, and your cash flow improves.
Mm-hmm.
So there's all kinds of things that a mortgage professional will actually help you analyze to put you in the very best position to help you reach your long-term goals and take care of your short-term needs with your loan programs. So give us a call. Our contact information is there, and we're happy to help any way we can.
All right. Thank you, you guys. Enjoy the rest of your day.
You too. Bye-bye.
All right. Bye-bye.
Bye-bye.
Thank you guys for joining us again for week 4 home buying process, or home buyers month. That's what June is, home buyers month. Hey Erica, thanks for joining us.
Hey.
Hey Erica, that's our wife.
Yes.
We are about to end this week's live. But again, we're doing next Thursday, we're doing a drawing. So you have to follow Renee and myself on IG, Facebook, LinkedIn, YouTube, and Twitter. All the above social medias, all the above sites. So and we're gonna put I know I have about 4 people. I don't know how many you got so far that started that. I got 4 names already to put in the box. The hat.
I was at the mall yesterday handing out business cards, telling people that you need some free gas here. I was handing out business like, you need some free gas. I'm giving away $100 in gas. You better go in and follow all the instructions and point them out. So just so y'all know, Asia and I both have in our feeds the directions on how to join the giveaway, and we will be announcing the winner next week here on the live. You don't necessarily have to be on the live to win, but we will actually be giving away or drawing it. I don't know, we're gonna draw names out of the hat. I don't know how we're gonna do it, but I am giving away $100 gas card. Asia is giving away $100 American Express gift card, and also in addition to that, our guest from last week, Dolores, is giving out a free 2-hour session when she does credit counseling. So if anybody's interested in that, please go and look on either of our pages to get more information on how you can register to do that as well. But thank you everybody for coming on and joining us today.
Diane Delicious Delight. Glad you that's not Diane. Yeah, Diane Delicious Delight.
And she has been with us. Look, she's been rolling strong with us for 4 weeks. So, this is the other thing. We next week we are going to invite some of our viewers who have been here with us over the past 4 weeks, or even if you have not. But we would like to hear back from you all, to just hear just one, even if it's just one thing, one takeaway that you have gotten over the past 4 weeks of being with us. So we'll do a recap next week and just kind of talk about or touch on all of the things that we talked about over the past month. We're going to do the giveaway, but then we're also going to invite some of you all to come on with us and just share one thing with us. We like to see your face and put a face with a handle and allow you to just share with the rest of the viewers just one thing that you walked away with, so that we know that us being here every Thursday at 1 o'clock was not in vain.
If you don't want the face, show your face. Don't, you can put it in the chat, or you can put it in the chat, or you can text. Well, can't text cell phone while we're on. Can't say text your question, or if you want to do it in advance, you definitely can do it in advance.
Yeah, we can read them off. We'll just read them off if you shy. But if you're not shy, don't be shy. Look, we were shy before this is part of the reason why we're doing this, is to get past those. Just get out there and get in front of people, because there's a lot of information to share, things to know that, people, you can just assume that people know, but they don't. So we wanted to come on here and share as much information as possible from us and the people that we work with. And hopefully it has been very beneficial for everybody who's been watching.
And if you have not wasn't able to see all of it, you can go back to one of our pages and you can see what we did every Thursday. The last 3-4 Thursdays well, this one will be posted between today and tomorrow, but you can definitely go and see the last live about the credit and budgeting last week. Before that was rent with option to own. So in the week that we went on the very first week we was going on the steps and process. So thank you guys so much for joining us. We really, really, really appreciate you. So we'll see you guys next week for the win or contact you. Take care. Stay
All
good.
right. All right. Bye, y'all.
Bye-bye, everybody. Okay, wait a minute now. I'm going to disconnect us. Hold it. 1 second. Okay, where did that thing go?
The X.
Yeah. Girl, I'm looking.